Hello again, everybody. With the trading room going online early Monday morning, 3 a.m., I wanted to make sure that the majority of you at this point do understand exactly what constitutes a trigger on both the long side and the short side, and also what an emergency exit is, so that as you see this program live, you'll know exactly what you're looking at, and you'll be able to see the signals in real time. So a short signal, if you remember, is if a bar comes and touches the upper yellow channel and then closes on its low. We now have a trigger. If we come down here and look at the flow indicators, and both are yellow and they match that yellow band, then we have a short signal. We go short. The emergency exit right here is the bar following the short trigger is opposite to what the short trigger was. This bar is actually up. In order to stay in that short trade, the next bar has to be lower than the previous bar of the trigger. So we would exit immediately when we saw that form, and that was a one-tick loss. But almost immediately you came right back up to the upper yellow channel again, and you closed down low. Both your flow indicators were yellow, the star and the arrow were both yellow, so you went short again. This time your next bar kept you in the trade because it was lower than the trigger bar, and you can see it just worked its way lower and lower and lower. There's a couple of things you can do as far as taking your profits too. You can take your profits at 5 ticks, 6 ticks for the first lot, move your stop to break even. I put my first out at 7 ticks, and then after that out I move my stop to break even. But it's a personal preference thing as far as how you want to set up your target outs. The stops are always 5 ticks though. So from whatever point you get in, it's a 5 tick stop loss. So that's an example of a short trade. And here is an example of a long trade, which is basically just the opposite of the short setup that I just showed you. You can see here the bar came down and touched the white lower band and closed on its high. That's our trigger. That's when we look down here to see if the flow indicators match the white bottom channel color, which they do. The star is white and the arrow is white. That is a long trade. As you can see, it really never looked back, just continued to go higher, and that was 24 ticks from the trigger point right here to its eventual high. Now you can see here's another emergency stop right here. Bar came down and touched the white channel, closed on its high, and both flow indicators were white. So we had a clear signal to go long. Very next bar, however, was down. So we exited immediately. That was a 1 tick per contract loss. And you can see the market just continued to go against that long position if we had stayed in it. So the emergency exit is key. There's going to be times where you're going to think that it cheated you out of a good trade, but it's going to say so many more times than it cheats you that it's going to become your best friend. So I just wanted to go over real briefly the long triggers and the short triggers, because that's really the only thing that we're going to focus on for the time being in the trading room. And it's extremely simple. That's the beautiful thing about this system. It's very simple, and it's very tight stops. So if you need to watch this video a couple of times, or go back and take a look at some of the videos that I made previously, feel free. I look forward to seeing all of you guys in the trading room early this morning. 3:30 a.m. is going to be the Euro start time for trading. The room is going to open at 3 a.m. And there's going to be a lot of trading and watching the system. Not a lot of gabbing. I'm not a gabber. Okay. Look forward to seeing you all there.